Good morning, traders. Today is the 6th of August. Boy, what a big shakeout, right? I mean, let's go over all of this data and really try to understand what's going on. Yesterday, I posted a video calling it the shot across the bow. And after a lot of discussion and thinking about what was actually taking place in the global markets, as I mentioned to you, that this is a very unusual set of circumstances here. We've got uh, we've got the markets falling out of bed on number one, political concern in the U.S. related to Kamala Harris entering the race, and then number two, the Bank of Japan move. And it took me a while, a couple of days, to figure out what was actually taking place and why we saw this broad unwinding in the market to such an extent. And it really boils down to, as I said, a shot across the bow. The Bank of Japan indicated that they had to begin aggressively defending their currency against further devaluation. And I think that was a shot across the bow to other nations that they may have to begin aggressively defending their currency against devaluation against the dollar versus the dollar. So the real reality here is the US economic strength, as I keep suggesting, as the 900-pound gorilla, is going to drive foreign markets to begin to decouple from normal ranges of currency valuation. And I believe that's going to present a very real risk of global deflation, in the sense that if the US market continues strong, if we get a reasonable solution with the presidential election, and we move into new policy, the strength of the U.S. economy, the strength of the dollar, the strength of really our ability to, the U.S.'s ability to continue to perform. You know, it wasn't but 3, 4, 5 years ago that everyone was saying that U.S. economy is going to get overtaken by China, and then, you know, the U.S. economy, the U.S. dollar is going to lose its dominance. And then we were seeing all of this comment about how, you know, you don't understand, this is just going to happen, blah, blah, blah. Now we're seeing US dollar, you know, holding above 102, 103, most of the time above 105, 106. US economy producing strong economic output in the face of rising interest rates, in the face of a global slowdown. And again, I think this is a shakeout taking place. But as I keep telling my subscribers and my friends, so where else in the world are all of these trillions of dollars going to go for safety and security and return on investment? It really comes down to, think about the global markets, hundreds of trillions of dollars potentially. Think of you know, the derivatives, literally hundreds of trillions of dollars in derivatives. You know, in a world where uh, currency devaluation, slower economics, debt, and growth issues are playing out, where else are they going to go? Where's that money going to go? Is it going to go into Russia for stability and growth? I doubt it. Is it going to go into China for stability and growth? I doubt it. Let's start talking about the biggest economies on the planet. Is it going to go into Europe? Well, maybe dispersed into Europe. And I imagine 20, 30, 40% of the global capital will move into some foreign market, undervalued foreign markets, when things begin to stabilize. But in the big picture, of the strongest, and I use the term, you know, the best piece of trash. You know, in the world that is devaluing their currency and chasing the uh, ever shiny golden ring of trying to properly monetize their economy while balancing growth and risk factors, the real reality is the U.S. economy continues to be the best piece of economic trash on the globe. So no matter how you look at it, there's very few other countries, currencies, and economies that can perform like the US economy, especially seeing as though we're moving into what might be a cataclysmic change. I mean, we're looking at an election right now with, getting back to President Trump, which means, stronger sanctions, potentially stronger pro American growth, stronger foreign policy. We could have a vast array of new policies and procedures set up to strengthen the US economy, or we get Kamala Harris, where, if you know anything about Kamala Harris, she has been in the past very liberal, very open to what I would consider progressive slash socialist kind of ideas. Still will require a ton of spending. So we need to see how this plays out, and we've got less than 90 days. We've got about, if my math is correct, about 86 days left before the election. And that's going to play out very interestingly. So, what I'm going to warn you today as we look at this chart is that this was the very deep low. If you remember, I talked about, how this was such a strong opportunity at these deep, deep lows, and that traders should consider moving into what I called anchor positions yesterday, buying the deep lows that we're going to be setting up, because this could be, 5, 6, 10 months from now, one of the best opportunities of your life to get into this great market before the vortex rally sets up. And I still believe that's the case. But I believe that if you're smart, you will, again, wait for the markets to move into more confirmed trending. So we're looking at the SPY now trying to open around 521. Ignore the SPY cycle patterns. They're not going to work when volatility gets above, say, 15, 16, 17. They just, that's a crisis, some kind of a abnormal event that's taking place in the market. But in reality, we have this gap and this major gap here. We filled this gap. We have this gap up here that's still wide open. And the reality here is likely, ladies and gentlemen, that we're going to see the markets try to fill this gap, move around, maybe move up to fill this gap, and then settle back into this area here, which is going to probably be a base mode for the SPY and the general markets. It would be a complete 50% retracement from this move. You can see here, it's very easy to measure. Here, we'll measure it real quick. So we'll just go off of what I call rejection points to a rejection point. And you can see here, 518 right here. 50 to 618, right in that area. So there's where I really do believe the markets are going to attempt to move. I think you're going to see the markets try to move back up into fill this gap area, and then move back up into this 50 to 618 area and build support. And from there, that's going to close this second gap right here. Okay. And then that's where we're going to likely see it rally back out as we start to get closer to the election. This deep move here likely eliminates the risk of a potential downside move in September or October, unless, again, unless there is some massive kind of a disruption event taking place before the election. So understand that we have really all of this time here before the election, October, November here coming up. We have all of this time here before the election over here on November 4th, which November 8th looks like I drew this line. I will carry this over here, November 4th. There we go. Visual order, bring to front. That's the election. So the reality here is we could stay trapped in this range. We could stay rotating in this range somewhere between here, as I drew, maybe back down into here, rotating before the election. And I think the last 20 or 30 days before the election, I think we're going to have a lot of clarity in understanding what's going on. with regard to who the potential winner is and what the likely outcome is. But I do believe that now that we've established this deep, deep low, as long as we can close this gap here, I think that we're going to be looking at a upward movement. So again, it's going to be contingent on closing this gap, which we have yet to do right now. I think we're going to be looking at upward movement into, and I think it's really going to boil down to um, shaking out the cobwebs right now. Yeah, the Japanese yen move, the Bank of Japan move, was a shot across the bow. It means that global markets, global central banks may begin to aggressively defend their currency, but that could happen over the next 12 to 16 months, depending on currency risks. I do believe that the US dollar will continue to strengthen after this shakeout, particularly into this area here as we start to move back into the pre-election basing. And I do believe that the next move for the market is to reestablish support above this 618 to 50 area as I've drawn. I do believe that is the next move for the market to be able to rally back up. And I will highlight this because this is really what I would call second phase rally. So the first phase is to come up to here. So here, this would be our first phase rally to come from these lows back up into 50618 area. Second phase rally, which would close the second gap, would be to move back up into this area, maybe attempting to fill this gap, maybe attempting to touch new highs briefly before rolling back down into this area and reconfirming this sideways channel before the election. Now, the vortex rally that I've been talking to you about, this is really playing into the currency trend. So understand that that vortex rally that I told you was going to be setting up, it actually plays out perfectly in this event. It just now opens up the range more so. Well, let's do it this way. More so into this area. So, and then I will copy this, try to make this more visible, try to make it something that says rally. Let's make it light blue. And then we will drag this up into here. So the vortex rally itself, as I highlighted here, is really more along the lines of this, potentially setting up off of this deep, deep low down here, moving into a channel kind of like this through the election, maybe a little higher, maybe a little bit more aggressive. But I believe the vortex rally is going to take, maybe another 20, 30 days to settle because of this deep rotation through this area, 2, 3, 4, 5 weeks. Then we're going to move into some basing right before the election and really begin to rally. And that's where the vortex rally comes in. What's going to be the context of the vortex rally? You've got a new president, new policies. You're going to have continued, in my opinion, currency issues, particularly devaluation of weaker currencies against the US dollar. We could have global conflict with what's going on in Israel and the Middle East. Hopefully that settles out fairly quickly. But again, I think this vortex rally is kind of baked into the cards right now. The only thing I'll tell you that the Fed could do to maybe really disrupt this would be to attempt to lower interest rates between now and, say, the first quarter of 2025. If the Fed were to acquiesce and give into what everybody wants, which is a lower interest rate, we're going to likely see the currency pressure and global market pressure weaken, and that's going to give a little bit of a crack in the mechanism right now, and that's going to give us the ability to see potentially, some real wild market moves into this election to inauguration area. Remember, inauguration's back over here around January 20th, 21st, I think. So again, my feedback is the vortex rally is really setting up. This is a shakeout. The shot across the bow was heard and seen. And I believe what happened here is this shot across the bow was essentially retail and derivatives getting out of position, and even institutional as well, getting out of positions related to the currency risk stated by the Bank of Japan. I believe this bottom basing mode here is really institutional level buyers coming in and saying enough. There is no real reason for the markets to be collapsing like this, other than the fact that the Bank of Japan has indicated that global currency central banks are going to have to potentially um, uh, defend their currencies more aggressively over the next 16 to 24, maybe 36 months. So we will see how that plays out. But we've got no real data coming in today. We've got an auction, three-year Treasury note auction. We'll see how it plays out. Again, I'm not looking for a straight up rally today. If I were to come back down here to the 30-minute and then rescale, I would literally, we're looking at opening at 521, and I would literally be looking for a move not much higher than here, not much higher than 528, 530. Potentially filling this gap, maybe falling short, maybe rolling back down a little bit towards the end of the day. I'm expecting upward movement, but nothing like 2 or 3% straight up. I think this next move is going to be a bit more labored to the upside, but still will come up and fill this gap and move into this area. Like I told you, the 536 to 543 area eventually, maybe by middle end of this month, maybe by the 20th or 21st. But I think it's going to be a lot more labored. It's not just going to go straight up. It will look like a deep V pattern. So you could see the SPY up above 536, 540 fairly quickly within 5 or 10 days. But it's going to be a slog, and that's why I recommend that you protect your capital. Don't try to chase these trends. Trade with smaller allocations. Remember, this type of volatility, I mean, if you're really good and you know what you're doing, it can make a fortune. But if you don't know what you're doing and you're having trouble, boy, oh boy, this can be a real disaster in the making. Okay, and I'm talking about a real disaster. You can definitely blow up your account getting on the wrong side of some of these trades. So be aware. We're likely going to see a lot of volatility over the next 5 to 10 days as this settles. It's got to get up into this area, this 536 to 544 area, to settle. It's critically important that we get up into this mode. This will be a perfect Fibonacci retracement to move into kind of a rebalancing position before we initiate a new trend. So I'm going to leave it there. Let's take a quick look at gold. Gold's probably going to be rallying 24.52. Let's come back over here to daily. Yep, nice move here off of this bottom. As I got a lot of lines on here, I'm not going to draw any more. I am expecting gold, or was expecting gold, to move down into this area, which we did get yesterday. We have seen this. I do expect gold to attempt to settle here. Remember, gold will rally. It will move a lot higher. I mean, well above 2,700, probably in the next 4 to 8 weeks. But in the meantime, you're going to have to deal with some consolidation back down to this 2430, 2420 range, maybe back over into this area where my flag apexing is setting up. So be aware that, we could have another 5, 6, 7, 8, 9 days of sideways flagging before gold makes a big move. Just be aware. Okay, guys, that's it for now. Talk to you later.